Good morning, ladies and gentlemen. And Nkrumah, thank you for introducing me. I feel disinclined to linger at great length at pleasantries for fear that I may overrun and you'll throw me out. So I want to then just delve into the substance of my visit with you over the next 20 minutes. I've parceled some theater around three installments. The first is to give you some sense of the structural forces that we think have been primal to Africa's growth tonic over the last 2 decades. The second is to talk a little bit about income mobility across a little less than a dozen countries. And then thirdly, in the aftermath of the pandemic, to talk about the cyclical forces driving the continent. Now, by now, some of those so-called structural forces or sweeping forces have become common cause. I don't think I'm going to really be novel in some of the suggestions that I'm making. But I still thought it was worthy of revisiting these ideas, especially given the interruption of the pandemic and the wonder that may prevail with regard to what extent has those sweeping forces been derailed, or do they still remain fundamental and core to Africa's thrust? I say that this is common cause because nobody is going to really be enamored by the suggestion that Africa's population thesis remains a fundamental driving force. Yes, some will say, of course, there is great dependency in this notion that by the middle of this century, roughly 1/4 of humanity will reside on the continent. The economic substance of the suggestion is rooted in the notion, well, there's just three forces that drives economic growth. There is financial capital, human capital, and the third ingredient is innovation. Economists sometimes talk about multi-factor productivity. But having been dissuaded from using jargon, it's simply innovation. And we estimate that just simply the ingredient of people lending themselves to the workforce continues to account for between 1/3 and 45% of the thrust that many economies are experiencing. And so, hence the suggestion of it remaining a fundamental sweeping force. And as you can see, not only, for example, with China's population in nominal terms decline, but of course its share of humanity will shrink. India may see an increase in its nominal number of citizens, but declines in its share of the global population, whereas neither of those two will plague the continent. Then, of course, another subset of the demographic thesis relates to the age distribution. The idea that less than 6% of the continent's citizens are over the age of 60. Now, we've spoken at great length over the years where we've argued that this, in a traditional sense, suggests that Africa's dependency ratio is not as severe as that of Europe, or even Asia for that matter. You know now, well, that the median age of an African is around 20 years of age, that of an Asian is around 33, that of a European is closer to 45, meaning that in the African sense, the number of aged, and one would suggest that there would not be productivity, and aged people generally lending themselves to the workforce, and also very, very young people that are still dependent. So that so-called youth bulge seems to still portend favor for the African continent. But there was another, I guess, unexpected level of shield that this demographic bias delivered. Of course, we saw markets like Europe very heavily and sadly plagued by especially the Delta and Beta waves of COVID-19. Quite simply because they seem to traumatize aged people so much more. However, in Africa's sense, and forgive this prickly language, but Africa was able to find shield in the sense that, well, quite simply, the bulk of Africans were more youthful, and in that youth was some level of shield against the more severe disease within the various pandemic strains. And so Africa did not experience the so-called mass graves, a tribute, quite simply, to this relative youth bulge and the diminished share of aged people. It's stunning if you consider that to date, not much more than 15% of Africans have been vaccinated. So even though vaccine nationalism was detrimental to the continent, as I said, the tonic, the defense lay in relative youth. If we distribute humanity across geographies, or at least consider the prevailing distribution and how it's likely to morph over the next few decades, it's astonishing if you consider that some 2/3 of humanity will find itself in this somewhat of a boomerang of geographical distribution. Production, productivity, consumption, development, and improvements in terms of income ascendancy is going to be, well, it already has shifted profoundly away from the West towards emerging markets. We can safely say that over the last 30 years or so, never before have so many benefited by so much, and so many of those have been in emerging markets in terms of the proportional uplift in terms of welfare gains. And that is unlikely to be disturbed. We will likely see more of that ascendancy in emerging markets, in developing economies, on the eastern shores, and the chords between so-called South nations will be fundamental to that thesis. Slightly tangential in terms of the sweeping trends, but just to highlight the ascendancy of the East, and in particular China. Of course, it was around 20 years ago we were introduced to the concept of BRICS, which basically gave, I guess, stamina to the idea of what I've just mentioned a moment ago, increased ascendancy of emerging markets and the establishment of so-called South chords in terms of finance, people mobility, in terms of trade, and also, I guess, in the shaping of geopolitics. In this exhibit, self-explanatory, you get to see the manner in which Africa's umbilical cord, with China in particular, Asia more broadly, has simply swelled. It's unprecedented in economic development, the manner in which trade tentacles have been established in such a short period of time between two regions, of course, sub-Saharan Africa generally, and China in particular. It's astonishing if you consider that just 25 years ago, China accounted for less than 2% of Africa's international trade, and now it's the #1 trading partner. If you consider the US has halved in its share, and Europe too has halved in its share of Africa's trade, falling from 40% of Africa's international trade to below 20%. And of course now those Western nations are grappling, seeking to reclaim some of that lost share. But as I said, that was tangential, but speaks to these sweeping drivers. We've also for a length of time highlighted urbanization, rates which hover around 80% in the developed world, but generally is less than 50% across the continent. We think that this urbanization is going to continue to be afoot over the next 3 decades, introducing and elevating the idea of city-based agglomeration. The idea that the city-state will supersede the nation-state in the way commerce is done. Of course, it won't be an elegant migration. In some locations, we think about the swell of urban slums as a symptom of that migration. But in that is, of course, both test and opportunity. Opportunity in terms of housing, commerce, and quite simply, the establishment of public infrastructure, and how city-based economics is going to really provide that scale, as gritty as it may presently be, into some level of formalization, quite simply for motives of social stability. You know technology matters, right? And I guess if I had asked you how long did it take for the telephone to reach 50 million users, many of you would probably have guessed around about 75 years. Now, very quickly, this exhibit is just to speak to technology through two dimensions, hardware and software. Access to technology is the defining feature. If we were to consider a television, a 42-inch television, if one existed in 1940, it would probably have cost $10,000. And you can access that now for under $200. Maybe not super high definition, but certainly in its most base form. So the point is quite simply that hardware prices have plummeted. And the idea of the tablet at under $100 and smartphones similarly at accessible prices or more accessible prices has quite simply meant that the technological leapfrogging that has defined the continent has been made possible because of that plummet in prices and the lower hurdle rates to be able to access. And of course, quite simply, software and networks. And so with this exhibit, what I try to highlight, one of those foremost games, I know many may be more enamored today by Candy Crush and other modes of playtime. But Pokemon Go was one of the forerunners in terms of games that go viral. And whereas it took the telephone 75 years, and it took radio 38 years to reach its 50 millionth participant, it took less than 3 weeks for a game. And today, that's of similar variety for other themes and personalities and influences for that matter, and ideas to go viral. Let me go into the second thesis or chapter in my visit with you, and that's income analysis. We've refreshed some of our historical data. We've looked at around 11 countries. Here I'm just simply displaying the population and the GDP size in a recent year to give you some level of scaling. And we just sought to test whether people are actually moving upwards in terms of various income strata. Here's just an indication of how we've defined the various income groupings. In 1990, as you would imagine, the bottom of the pyramid was really a very substantial share of housing humanity. People were mostly low income, with slivers of low middle income, and high income. In just the period of 15 years or so from 1990 to 2014, even though it may not seem manifestly great, given the scale of population, we saw a swell in the number of people in the more higher income strata. And similarly, we continue to see that afoot in the current decade. So the middle income opportunity, the high income opportunity, yes, still a sliver in terms of share, but sizable nominally in some markets, is of course a commercial opportunity. But it would be remiss if we didn't say something about that still very sizable pink, reddish share. And we need to think differently in terms of how we think about people and consumers within the low-income segment. It's just too crude to place everyone in that low-income segment as a homogeneous group with similar spending patterns. Quite simply, someone that is low income will have a different spending dimension to somebody that is high low income. And so what we sought to do was just to give a little bit of texture to that low income grouping, and again, break it down into 4 slivers, defined here, as you can see by these income scales. And very encouragingly, what we notice is that similarly, in the roughly 15 years, decade and a half between 2000 and 2014, actually I shouldn't be saying 15 years, because it's 25 years. Thanks for correcting my math. And then up until 15 years to 2030, our projection. But what we notice is that there has been that mobility from low income level 1 or low income to low income and high low income for that matter. So 4 grades of the low income category. So the economists in the room will no doubt be saying this quite simply affirms the notion that GDP growth is quicker than population growth. But even at a disaggregated number, or as highlighted in his exhibits, there is that level of graduation. So as I come to the remaining few minutes of my brief visit with you, let me talk about cyclical Africa. Cyclical, of course, in the aftermath of the pandemic smash. Many of us would have, I guess, noticed that the crimp to Africa's economy was for the most part artificial, in the sense that the pandemic's impact through to economies was mostly a function of the lockdowns. We estimate that the lockdowns would have accounted for roughly 2/3 of economic suppression. The other third, more or less, was a function of economic weakness. So the rules, the lockdowns that lock people in homes, that suppress consumption and production was the underlying driver and the mass driver of economic suppression. But as it evolved, and as Africans very quickly realized that we were not going to be as traumatized as the Europeans, and I don't say that with any disrespect, but to the extent that Africans would not be experiencing a similar level of weight on its health system, the lockdowns graduated very quickly to softer touch, and sometimes very substantial levels of mobility was allowed. And so too, economic activity recovered fairly briskly. And hence my suggestion of it being, for the most part, artificial. And so we've seen fairly lively, in a relative sense, recovery across most nations. In fact, in 2022, we're likely to see many markets functioning at what we would judge to be trend growth. And I say trend growth because you probably see very similar rates of growth next year for most of the sub-Saharan African countries that we envisage this year. So just to give a little bit of graphic context, per capita income has begun to pick up momentum. In other words, most markets are experiencing GDP growth quicker than their underlying population growth. Just classifying African economies into a few buckets. Of course, on the extreme left is just the summary of sub-Saharan Africa. And then there are the tourism-dependent economies that we know were exceedingly smashed during the pandemic and have bounced back and are likely to recover quite meaningfully into the end of this year, particularly as Northern Hemisphere winter sets and African shores become the historical allure again. Non-resource intensive countries, typically on the eastern shores of the continent. The other resource intensive countries, meaning the non-oil but still resource intensive economies. And then lastly, the oil economies, really benefiting from the elevated levels of oil price, even though in the major markets, there's been, in fact, less oil volumes than we would have been familiar with in the early part of this century. So 2 maps just to very quickly capture the type of numbers that we think about in terms of what occurred last year and what we think will unfold this year. And there's perhaps a few ideas that jump out. In the early 2000s, we were accustomed to Eastern Shore economies, the oil economies growing at high single-digit rates, sometimes even mustering early double-digit growth rates. But the Angolas, the Nigerias of the world seem now to be more anchored around low single-digit growth rates. And I think that will be the norm. And I would just underscore, that's a marked change, a switch from the early 2000s. We don't think it's going to be much more elevated than this. So oil production, in fact, for the last 2 years in Nigeria and even in Angola has generally subsided. Non-investment amidst a plethora of other motives to suppress that has been defining. And East Africa has been resilient through the 2000s and has been able to continue to hold muster. And so I think that defines the way we think about the continent, at least in a geographical sense. And, well, with that, you get our sense of numbers. I have steeled eyes and steel presence staring me down, and it leaves me to just say thank you. And good luck.